Video 21, RSI and ADX. The RSI, Relative Strength Index, is very similar to the stochastic that I taught in the previous video. It's very similar in the sense that it signals overbought and oversold conditions, but there's a bit more to the RSI than just these signals, as it can also determine the trend, and I'll demonstrate this on a chart as this video goes on. In this video we're also going to look at the ADX indicator, Average Directional Index, which measures the strength of a trend and can signal when a trend is losing strength and potentially be coming to an end, and can also signal range breakouts. These are two fun indicators to have a look at, and just like all the indicators I've presented in these videos, they are commonly used indicators by retail and corporate traders, and they can definitely be an asset to trading when used correctly. This is the same price chart I used in the previous video to teach about the stochastic. It's the US dollar, Swiss franc, and it's a daily chart. We have this clear downtrend on the price chart, and at the bottom of the price chart I have my RSI set at the common default of 14 close. So just like the stochastic, we have a gauge. With the stochastic, that gauge went from 0 to 100. If the stochastic lines went above the 80 mark, that generally meant that markets were overbought, and when our stochastic lines went below the 20 mark on the gauge, that generally meant that price was oversold. With the RSI we have a similar concept. When our single RSI line reaches 70 on our gauge, we have overbought, and when our RSI line reaches our 30 or lower, that's a signal that markets are oversold. So we just compare this indicator with our price chart to see how reliable this indicator can be. So we have this swing to the upside. We have a signal of markets being overbought just here. Let's mark that with a vertical line. So right there, and you'll see as soon as that 70 area is hit, signaling overbought markets, price falls heavily on the downside. We have a signal also here. Once again, price falls on the downside. We have a signal of oversold right here. Our RSI line reaches the 30 and dips just under. You'll see that price goes for a little push. It does pull back a bit further and then goes on the upside. We have another line reach 30 just here, right there, and then price moves on the upside. So from this example, it's very reliable in signaling overbought markets and oversold markets. And just as the stochastic demonstration in the previous video, we can analyze price action such as pushes and pullbacks, wait for a signal and use the RSI as a confirmation. We can also use the RSI to close positions. If we had joined this downtrend up here on this bearish engulfing I've demonstrated in this video and in the previous video, our RSI agrees, we could have gone short there. And then we can close this position when our RSI is signaling oversold conditions, which is here, round about here. So we could have gone short here and closed here. which is pretty much the start of this major push to the downside and pretty much the end of this push to the downside. Price does come a bit further here, but overall that would have been a very good trade by just analysing price action and using the RSI as a confirmation to open and then as a signal to close the position. The RSI indicator also has another feature that the stochastic doesn't, and that's this center line here, which is set at 50 on the gauge. And how this center line works is when the RSI line passes this center line, it can signal a movement on the upside or the downside. So if we're coming from above 50 and move below 50, that's a signal that price could fall on the downside, and let's mark that here, and you'll see that price does when the RSI is below 50 and moves above 50, that's a signal that price could move on the upside. So let's mark the break of that 50, which is here, and price does move on the upside. We have another break here from below 50 to above 50, price moves on the upside, above to below just here, and price moves on the downside. And then we could continue with the rest of this chart. If you remember in the previous video, I demonstrated how you could have joined this trend right here on this pin bar or bearish engulfing off a trend resistance and earned as price fell on the downside. You'll notice that our RSI line has just passed the 50 from being above to below, so price could continue to fall on the downside now, and this is current real price action happening before our eyes. Let me now demonstrate the ADX, or average directional index. This is the ADX indicator at the bottom of the screen. Similar to the last two indicators, we have a gauge and a line moving up and down on the indicator. Now I suggest the ADX indicator to be used in two ways. First of all, to identify when trends are losing momentum. Jewel of the ADX, and that is identifying range breakouts. On our ADX we have a gauge once again, and we have this line set at 20. When our ADX line is below 20 and stays under 20 for a long period of time, that can signal that price is losing momentum and price can range. I still have the US dollar Swiss franc chart. You'll see that as price downtrends, that our ADX does drop into the 20 zone a number of times, but soon comes out. It's interesting to note though that this last drop stayed in the 20 zone for a longer period of time than previous drops. Which could signal that this trend is starting to come to an end. And the ADX is currently in the 20 zone. And if we were to see this ADX line stay in the 20 zone for even longer than the previous drop into the 20 zone, that would be a strong confirmation that this downtrend is now over, that downside momentum running out, and price could simply range for a while, or we could see an uptrend being formed. So that's one way we can use the ADX indicator, but the real jewel of the ADX indicator is identifying breakouts of ranging markets. And let me demonstrate this by staying on this chart. This is the US dollar Swiss franc daily chart. If we go back and spot a range like here, down the bottom here, bring up some horizontal lines. So one there, and then one down here. Okay, something like that. Okay, you'll notice that price is ranging, it's moving sideways, like so. You'll notice that as price is moving sideways, our ADX is in this 20 zone. And you'll notice that when we had this false breakout, the ADX was clearly in the 20 zone, under 20 on the gauge. But you'll notice that when we have the real breakout of this range, which is here, our index indicator shows the ADX line above the 20 zone on the indicator. And what's interesting is the ADX line comes out of the 20 zone before price fully breaks out. So this can act as a signal that price is going to break out and to place a long or short position accordingly before price does break out. It can act as an early indicator. So price crossed here, and then the official breakout was 2 candles later, right here, which was 2 days later. To summarize, both indicators are reliable when used as a confirmation or part of price action analysis. The ADX measures the strength of a trend, and the RSI change of price direction, and the continuation of price direction when the RSI passes through the digit 50 on the RSI gauge. Our next video is Ichimoku Kinku Hayo, which is definitely one of the more complicated indicators, if not the most complicated indicator in retail trading, but it's very useful and it's not as complicated as it looks. And in the next video I will demonstrate the Ichimoku Kinku Hayo and how it can be used to trade Forex. If you haven't already done so, please check out our website forexminute.com.